All right, guys, it's that time again to discuss what I'm buying this next month. And there are some massive names on this list and some names that did not make this list that may make a few of you guys mad out there. So at least hear me out and then go ahead and be mad at me all you want down in the comments. So I'll give you those stocks specifically, the exact why and reason behind wanting to buy those stocks, and everything else today. So a lot to get into today. But make sure you like the video if you like getting the truth without the hype, because that's exactly what we're going to get today, guys. And trust me, there is a lot of hype out there. I covered it right up here in this video. Even though some folks wanted to say there is no hype out there. Those were just normal expectations, guys. Unfortunately, that's not true. Now, getting back here to this list, some things to keep in mind, because I know it's been a while since I bought these are the stocks I'm going to buy next type video. These are just the stocks that I'm targeting specifically right now. Sure, there's a lot of great stocks out there in the stock market. There's a lot of great buys out there in the stock market, but I can't speak for every single stock, folks that get out there and do that. Sorry, you just can't have done the due diligence and the kind of level of in-depth research that's required to actually know, is that stock a buy or not? So I'm not going to talk about stocks I haven't done that sort of research on. This is based upon my plan, where I feel these stocks are in relation to valuation, more importantly, and how they kind of fit in with my overall portfolio goals and everything else. So just kind of keep that in mind here. This is just strictly based on that information, not necessarily the best stocks to buy right now or anything else of that nature. To me, these are the best stocks to buy, but that doesn't mean that they're actually the best stock for you to buy as well. That's why you got to do your own due diligence. You got to understand what you own in the first place, understand how it fits in your portfolio, how it fits with your goals and everything else. When you understand all those sorts of things, it becomes very easy to choose great stocks for you in your situation. When you don't understand those things, that's how you end up with a bunch of dividend stocks when you're 25 years old and you want to try to grow your portfolio as fast as possible, or vice versa. You're retired and you're just needing income, but yet you own a bunch of high-flying, high-growth stocks. For what reason? I don't know, but it's not providing you what you need, which would be income in that particular situation. So understand that up front here. This is kind of the logic and kind of the reason behind all of it. So first up, we have PayPal. All right, I know it seems like forever this stock's been on this list, because probably it has been on this list forever at this particular stage. We finally got a nice rally going, everything going great. We actually got not a spectacular, incredible, best of all time type earnings call, but a very good earnings call, very good guidance, very good everything. And Wall Street beats it down once again, which of course means, hey, I may be forced to add a few more shares of PayPal once again. It continues to be one of the best deals in the stock market there. And yes, the fundamentals will always catch up to stock price, or the stock price always catches up to fundamentals, depending upon whether the stocks run ahead of the stock price of the fundamentals or not. Unfortunately for now, PayPal comes back onto the list here. Hopefully this next year proves out a lot of the bull points that Alex has laid out there for PayPal, that a lot of the things start to come to fruition. We're already seeing signs of it, but where we start making market strides and EPS number, that right there is when we'll start seeing that valuation get pushed. And more importantly, the stock start to really move to that upside there. But for whatever reason, that was the mood Wall Street was in. I mean, there was lots of stocks with bad earnings, no guidance, just absolutely nothing really going for them. And then they went to the moon. I mean, that's typical earnings. It's kind of what Wall Street does. But it just kind of sucks that it once again happened to PayPal to the reverse, where everything was pretty good and ended up going down instead. So for me, probably going to add a few more shares. Again, I'm not going to buy big buys or anything else like that. I've already bought a ton of it. I don't really need any more of it. But again, putting my capital to work is what matters, and being able to get more than a 4% return or so, which is what my cash is doing on a stock like PayPal, which I think it'll beat that 4% here over the next year or two, is something that I can't really pass up in regards to putting my capital to work in the best place possible. So unfortunately, some of that little piece of it is going to go towards PayPal most likely. So stock number 2 is Sofi. Now, let me be very clear. This stock is above my target for Sofi. The prices are actually pretty significantly above where my price is, where I want to buy Sofi at. However, this stock moves a lot, and it has moved a lot in the past few months. And that's just kind of part of a stock that's kind of at its beginning of its growth journey. It is still firmly trader controlled. Traders are going to play games with it. And we have seen this in the past with Sofi before. I mean, we saw it all the way down to $4. It would run up over $10, crater all the way back down to $4 or $5. Kind of a rinse and repeat process here with Sofi. It looks like we got a much better run. Obviously, I thought earnings were wonderful. I didn't understand the freak out or anything else. Check this video up here for my latest thoughts on Sofi if you're wanting those specifically. But for me, it's a great stock, a great company that is a little bit ahead of itself in regards to stock price right now. I know that goes against the grain with whatever the heck the hype narrative is out there, where it should be at 75 tomorrow, whatever the case is. Okay, whatever. I'm okay with that. But nonetheless, I'll remain patient. Luckily, we added so many shares in the $4, $5, $6, $7 range. Even last year, you could add right in those upper bounds of that range for basically most of the year. So I have plenty of SoFi, just like I have plenty of PayPal in the bank. But don't threaten me with a good time with a great company with a great long-term future like I feel SoFi has, with people trying to get ahead of it short term and wanting them to take short term, profit maximizing instead of actually doing what's best for the business long term. Again, we discussed that in the video I just pointed you guys to. That's what I want out of a stock as a long-term buy and hold investor, which means we may get some more pain in SoFi in the meantime, as people don't get that short-term mentality and that short-term pop. I'm talking to the traders here. Don't get that in order for them to continue to juice it up. So for me, it's on my watch list right here. I'm looking to add that stock, but I need it to fall a little bit further in order for it to get there. But it's not like it's out of the realm of possibility. Like some other stocks that I absolutely love right now that have gone so much into the stratosphere, I'm not sure I'll see my price target anytime soon, so it won't be on this list. And speaking of stocks that are not on this list, and before we get to the last one, let's discuss Tesla quickly here, because I know you guys are going to ask about it down in the comment section. Now, I personally thought it was trading rich coming into the last earnings, and the earnings honestly gave us nothing tangible. I know a lot of folks got upset about that. I'm sorry, we got no guidance, not much else in regards to tangible numbers, except for $1 trillion this and $1 trillion that. Sometime in the future, where apparently trillions of dollars will be like the new $1 million or something of that nature. That's kind of the way it was taken. So when we look at valuation for Tesla, we basically got not a whole lot, especially given where it ran up. Instead of doing like Nvidia did, where we basically get a valuation reset on earnings, we didn't get that. We pretty much got nothing that would have made the stock cheaper in regards to valuation. Now, it's not overvalued like it was in 2021, but it is overvalued. And I have a ton of Tesla already, and I want a discount on a stock in order for me to buy more, especially whenever I have a full position in a company like I have with Tesla. And I'm sorry, I don't think we will see a discount on Tesla anytime soon, unless the new model coming in Q2 is just basically a refresh or something like that. I don't think that's the case, but that's something that could send it down more into my price range. Or maybe they finally give us guidance next quarter that they didn't give us this quarter, and it kind of underwhelms. It's kind of not really what Wall Street's looking for. It's really below what they thought it was going to be. Or if there's a delivery misstep of some sort or something of that nature. Of course, I don't think any of those sorts of things that happen, but that's absolutely something that could send it down to my price target once again. And that basically, for me, until those things happen, it just can't be on here for now. But I'm prepared if something crazy happens, because crazy things happen with Tesla, right? So you always have to be prepared. And yes, for those of you guys out there that want to criticize, I understand the opportunity with Optimus. And yes, I've driven with FSD, even the latest one. And yes, I know exactly, more importantly, how the stock market works and what large investors actually pay for, more importantly. That is why I have routinely added shares at or below my price target, that is supposedly a bearish price target, every single year for 5 years running. And I have a massive Tesla position at a very low cost basis to include the shares that I added just last year. I have no idea. This doesn't make any sense to me, guys, but I have no idea why some retail investors think that you're a bear if you buy cheap shares instead of buying expensive shares instead. I mean, it makes absolutely no sense at all. And anybody that actually thinks that, and trust me, there's plenty of people that do think that, they simply personify the buy high, sell low type of investing that exists routinely in the retail crowd, and it's quite sad. I really, really hate it. Now, thankfully, that's not the people that are part of this community, part of this YouTube channel right here. But I see those comments, I see them on other people's videos as well, and they're just laughable. I mean, the same exact thing applies with Palantir and SoFi lately and a lot of other stocks. I mean, I basically said buy at $6 and $15 with Palantir instead of buying at $100 now, but now I'm a bad investor. I mean, I don't know. That just makes absolutely no sense, guys. And you can't make this sort of stuff up. That's why you have to ignore the noise like we always talk about. And of course, with Tesla, the noise is always sky high, good and bad. So you got to ignore it all. Both the bulls and the bears have been routinely wrong with this stock. But enough of that. On to the last stock that did make the list, and that would be Google. Almost feels like a year. It hadn't really quite been a year yet, but it feels like it's one of those stocks that everybody just continues to count out. Everything is going to end, whatever the heck Google's doing, and it just doesn't make any sense. They're dominant. I mean, not just like a little bit dominant or, hey, they're the 60% and the 40% is catching up. I mean, they're like the 99% dominant over the rest of the competition. I mean, I've been hearing now for 3 years now, ChatGPT is going to kill search. I don't think it's really made a dent in search. I'm sorry, not according to the numbers that Google continues to give us and the numbers that Microsoft gives us with ChatGPT. It's not happening. It continues to be the dominant player, and the same exact thing with their main revenue driver, which of course is advertising. And you basically have Google, Meta, and then everybody else is down here fighting for the 1% down here at the bottom. That's how dominant they are in those areas, but yet people continue to discount the stock. They continue to push money into other names that make absolutely no sense. They continue to follow narratives around other stocks that aren't putting up the year in and year out, quarter in and quarter out numbers that Google is. I've got it. I don't think they're necessarily executing as well as some other companies, but you're talking about companies that are executing in the upper crust there. Great. You're also paying a lot more for those companies, and for a lot cheaper and a lot more value, you're getting a company that's just right on the cuffs of jumping some of those. And in some cases, Google is making strides to jump over them. Kind of almost feels like, I know we talked about this before, but like the Magnificent Seven is kind of just going through a rotation of, these three stocks are the favorites and everybody's pushing those. And then all of a sudden, hey, all right, we're cooling off on those. We're going over here to these, two over here. We're going to push them up, let these fall down. And those are just kind of where the opportunities end up lying. And for better or worse right now, it seems like the opportunity is lining right up for Google. Once again, it's already trading a little bit below fair value, in my opinion. And of course, that just means discounted shares coming for us. And so for me, absolutely, it's going to be a stock that I'm going to be adding some shares to my position in Google. Again, I got a full position. These are just bonus shares, but hey, I got to deploy capital. You want to give me a great stock that I know in 3 to 5 years is going to be much higher than it is right now, then hey, I'm all for it. Please continue to give me Google shares on the cheap. And if you want to see all those buys in real time, see my complete watch list with price targets, be able to take 5 courses for free, get your free coaching on how to do evaluation, how to examine companies, how to kind of form your own realistic bull and bear case, not the garbage that's out there in the media and YouTube and everywhere else. Make sure you check out the pinned comment. Those of you that stuck around this long, I may have left something special for you to get all of that and to be able to explore everything in our group. So check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.